As manufacturers of a pretty complicated product, brewers have a lot of factors that can drive prices up or down. Whether it's the cost of base ingredients like hops and barley, or the myriad of other costs like cleaners and staff, there are a lot of ways beer prices can get driven up. But every once in a while, there comes a big government policy decision that can have a pretty major impact on the price of beer. And this past week, we got word that such a decision might be coming down the pipe. Suggested tariffs on aluminum and steel announced by the White House and Department of Commerce could have quite the impact on the beer industry. After all, aluminum cans are the industry standard, and brewing equipment uses a lot of stainless steel. But why institute tariffs, and how big of a deal will they be anyway? Hey, this is Ryan with Beer by the Numbers, and today we're going to talk about beer and international macroeconomics and try to determine if the proposed steel and aluminum tariffs will have a major impact on the beer industry. Normally I don't feel the need to dive too deep into politics on this channel, but when there's a big story affecting the beer industry enough to elicit several responses from industry trade groups, I'd be remiss not to cover it. So today we're going to do our best to take a balanced look at the issue, examining arguments both for and against the tariffs in question. So before you grab your torches and pitchforks and head to the comments section, be sure to listen all the way through this video. Without any further ado, let's get started. I know a lot of people and news outlets like to use scary, semi-propagandistic terms like trade war and talk about things like trade deficits and currency manipulation, but I think that largely tries to obscure the basic issue by painting other countries like China as some sort of economic boogeyman. If you want a good explanation on what a trade deficit is and what effects it can have on the two nations trading back and forth, check the link in the description below. There is a great 2-minute video done by Market Business News that explains things. Anyway, in this case, we're talking about two metals, aluminum and steel. Both these metals are pretty dang important to the US economy. They're used in beer production, sure, but they're also used in all canned foodstuffs, cars, airplanes, and a ton of other products you wouldn't even expect. The US has a pretty big demand for these metals, and decades ago we had quite a few companies mining steel and aluminum to meet all that demand. But as the easiest sources of ore to mine were all used up, the cost of getting more metal out of the ground began to rise for domestic miners. Soon, foreign miners, mostly Chinese and Canadian, were able to get ore out of the ground much more easily than US miners. So as the price of the US metal rose, those who began to import it from other countries were making a quick buck instead. So the US finds itself in a situation where it gets cheaper metals that are used in all kinds of goods, but in exchange, many of the domestic mining companies went out of business and jobs were lost. Now, if we were talking about non-essential goods like video games or cruise ships or even YouTube videos, this arrangement might not be so bad. But some people who get paid a lot of money to think about national security see a bit of a problem with importing a lot of aluminum and steel. Say a war broke out or some major conflict happened and the US found itself opposed to the countries we import from, or mostly those countries need all that metal themselves. Well, then the US wouldn't have much of an ability to supply its own appetite for metals. And that could be a pretty serious problem. Not only are these used in a lot of defense applications like airplanes, but they're also important for safe, staple foodstuffs like canned goods. So what does the government do if it sees this as a threat and wants to reverse this trend? Well, they institute a tariff. Put simply, a tariff is a tax on a good as it enters the country. The idea of a tariff is to push up the price of foreign goods to make the domestically produced version more competitive. That way, more domestic miners and producers are able to operate profitably, and the domestic production and jobs come back to the nation at the expense of higher prices for consumers. But why in the world are they initiating this process now? After all, over the past few decades, the US economy has already adjusted to the lower production of metals and job losses. Actually, according to the Aluminum Association, the industry workforce actually grew by 3% over the last 5 years, so it would kind of seem like a weird time to add this tariff. Well, the Department of Commerce investigated U.S. trade in steel and aluminum and concluded that the current situation constitutes a risk to national security, and they have a pretty decent case as to why. High-quality aluminum and steel are both essential in military applications, especially for fighter jets and naval ships. If the supplies of these two metals were suddenly cut off, it would be difficult to have enough metal to make more military assets. But even beyond military uses, aluminum and steel are important for canning foods. Canned foods are especially important during times of crisis, as they keep better than pretty much any other source of food. If canning metals were suddenly to get cut off, we'd have a much bigger problem than not having enough ships or missiles. So yes, there is the potential that if times got tough, the US might not have all the metal it needs to make our nation's food supply safe. Of course, there are a lot of external details that need to be considered in this situation too, like does the US have too many jets and ships already? Or is the metal market even likely to close? But I'll leave that to the talking heads on TV to argue over. What I'm worried about is what the consequences of this tariff are on the beer industry. Aluminum is the metal brewers can their beer with, and steel is an important metal for brewing equipment. Increasing the prices of both through additional taxation will obviously have an impact to a brewer's bottom line. But how much? Well, the proposed tariff figures would put a 7.7% general tariff on aluminum and 24% coming from certain nations like China and Russia. The Beer Institute says for every dollar worth of beer produced in the US, brewers spend about a dime for cans and roughly 5 cents of that is on aluminum. Now, while that doesn't sound like a lot, it quickly adds up as brewers produce more than $55 billion worth of beer annually. Just a 10% tariff on aluminum would cost beer and beverage producers $256 million, and most of that cost would likely be passed on to consumers. But that steel tariff is even harder to measure a direct impact for. Opening a brewery is an expensive process. There's space to rent, staff to hire, and a lot of expensive brewing equipment to buy, including a lot of nice stainless steel stuff. These new tariffs may make buying brewing equipment harder, meaning an aspiring brewer is going to have a harder time securing the money needed and will have to sell even more beer just to break even. And I know the purpose of a tariff is to protect domestic industries and jobs, but the brewing industry is responsible for creating millions of local jobs all around the country, and it relies on cheap aluminum and steel. I know the metals are very important to a variety of goods, but it's likely that price increases for the beer industry may lead to layoffs, which kind of negate any sort of job benefits from the tariffs for miners. Sure, we might get more US mined aluminum and steel, but it's going to cost the beer industry some jobs and lead to higher prices for drinkers. That being said, there may still be a good reason to do this tariff. I'm not saying I know everything and have all the answers here, but at this point, I'm not really seeing a huge benefit to putting this into place that just cost craft brewers jobs and raise beer prices. I know there's a claim that national security will be helped from the Department of Commerce, but we already have the world's largest military, so I don't know if we should feel too threatened by the potential of getting cut off from metal supplies. Anyway, if you hear about this issue over the course of the week, I hope this gives you a good primer, not only to the overall impact on the economy, but also its impact on the beer industry specifically. Do you think tariffs are worth the trade-offs? Are you nervous about higher beer prices? Let me know in the comments section below. Once again, this has been Ryan with Beer by the Numbers, and I'll see you next week with more impactful beer industry content.